Hey guys, Opsec here, and today I'm going to be doing a trade breakdown video. I have not done one of these in a long time, and I'm going to explain everything here very articulately, okay? So, in today's trade breakdown video, I'm going to be breaking down a trade that I shared on Twitter, called it in real time. It was on ARB. It's an altcoin. And I'll show you that my concepts work here as well. So, why did I think to enter a trade when we were down here? What made me possibly think that after going down, making an all-time low, this shitcoin, what made me think it's not going to just continue lower? What made me think that? So, let's think. So, the first thing you must understand in this game is that it is not a game of everyone wins. It's a transaction. Whenever you win, somebody loses. Whenever you lose, somebody wins. It's always a transaction. It's a transaction between winners and losers. That is exactly what it is. It is a transaction between winners and losers. Now, in this game, there are sharks and there are fish. There's a small group of sharks and there's a big group of fish. Okay? Those sharks prey on the fish. So the fish are the prey and the sharks are the predators. Those sharks are banking on the fish. The fish are easy to hunt. They're very predictable. And the sharks know what they're doing, and they're formidable. So, when you approach the game from these lenses, right, from these prints of predators and preys, then you understand exactly who you want to mimic and exactly who you want to do the opposite of. So you want to do the opposite of the fish, and you want to mimic the sharks if you want to win. Why? Because it's typically a transaction between the fish and the sharks. When the fish, typically the fish sending money to the sharks and not the other way around, because the fish are typically losing. Retail, look this up, 90 to 97% of retail are in a loss. Okay, 97% of retail traders are losing. Is that by coincidence? I mean, naturally, the odds, the probabilities, wins and losses should be binary naturally. So it should be around 50-50 or maybe 60-40. That would be natural. But because it's so messed up, it just tells you it's manipulated. How can it not be manipulated? Like, how can this game not be manipulated and 97% of retail is losing? It's not natural probabilities. It's definitely a manipulation. It cannot be anything else. Prove it to me. Prove to me that it's natural. It's not. You can't. It's not natural. So, this means that it is a fact that there's somebody manipulating these markets. It is a fact, and you cannot argue that. These people who manipulate the markets, I don't know exactly who they are. Here we can argue. But this is my theory on it. So, when you go to buy Bitcoin, and you buy Bitcoin at the price of 30,308, random price. Somebody sold Bitcoin to you at that price. I mean, how else would you buy it? Somebody sold it to you. Who the fuck would sell it to you at such a random price? Who in their right mind would do that? Nobody. Except for market makers. These guys are called market makers, and they operate in these markets under the disguise that they are here to offer you liquidity, orders around the current price, so that you can buy and sell comfortably and engage with the price comfortably. So they're here to better your experience, pretty much. And they supposedly make a profit off of fees, a small fee, and they also make a profit off of spreads. So let's just say Bitcoin price is 3,305, and you buy it at 308. So they made money on those $3 difference. Yeah, that's not that much money though. They're really not making that much money from that. It's more risk than a reward. Why? Because if they sold Bitcoin to you and now Bitcoin price goes up, then they miss out on the move. If they bought Bitcoin from you and now Bitcoin price goes down, then they're losing money. So they're pretty much doing the opposite of you. When you buy, they sell. When you sell, they buy. This means that if you win, they lose. It cannot be otherwise. If you win, they lose. Because they're doing the opposite of you. So if you win, they lose. If you lose, they win. Is it within their interest for you to win or for you to lose if they're doing the opposite of you? It is within their interest that you will lose, not that you will win. So, if it's within their interest that you will lose so that they can win, then what does that mean? That means that they're likely manipulating these markets. They're also capable of doing so. Why are they capable of doing so? Because A, they have their pockets run deep. So their pockets run deep. B, they are the only ones engaging limit orders in these markets. Retail does not act with limit orders. You always just mark it in. Fuck it, just mark it in. Like, the amount of limit orders on the books from retail, I mean, the amount of limits from retail that are on the books, I'd say it's so tiny compared to what the market makers offer. So this means that the market makers decide where there's going to be supply and demand. They can buy and sell from themselves to move price. They set the limits. They set the supply and demand wherever they want. And by doing so, they decide exactly where price will go. So everything is fake. Price action, how it's moving, it's all manipulated. It's all fake. Why? Because retail doesn't get a say in it. So it's just a specific group of people who have perhaps an algorithm who does this for them that moves these markets in a way that they decide. Now, you must understand how these people operate, right? Because how do they open a position? They can't just open a long or open a short, right? They need somebody to buy from them, and they don't operate like that. No. When you go to fish, when you're on a yacht fishing, when you throw your rod in, you throw your bait in, you don't control what fish you'll catch. You don't know exactly what you'll do. You can influence what fish you'll catch, right? If you go fishing with a bigger hook, then maybe you'll catch bigger fish. If you'll set a specific bait, maybe it will attract this kind of fish. But you don't know exactly what you'll catch. You don't control that, right? You don't control that. It's very similar in these markets. So they can, if they have the power to move price the way they want it, they can engineer the markets the way they want, then they can engineer the markets in a certain way and hope that it will yield them a certain position. So if they want to open a big long position, they will make the markets look very bearish. And then all of retail will go short. And then if retail goes short, then they go long. Simple as that. So the action of retail going short is what yields them the long position. So if they want to open positions, they got to entice retail to open positions. So this is how you can follow them, because they leave hints and clues everywhere. They cannot hide it. Simple as that. They cannot hide it, because they cannot hide opening such a position. They got to manipulate everyone else. So what mindset should we approach these markets with? You got to approach these markets with this mindset. You need to see the manipulation. See what they're trying to make you think. They're trying to make me think that the market's going down. And then you need to find a way to leverage that. So if you understand that they want you to think it's going to go down, how do you leverage that to make to capitalize on it in the best way possible? So I'll show you how I did that here. So at the time, price was down here. We had just liquidated all of retail's longs. We just made an all-time low. All of retail longs were liquidated at this point. There were perhaps some of retail still in short from maybe this area, but I'd say most of retail had already realized their shorts. So this tells that at this point, smart money, the market makers were in slight long positions. Why? Because retail was in slight short positions. So if retail's in slight shorts, the market makers are in slight longs. Okay. So this tells us that we're likely gonna start seeing a bottom soon. Now, how do we confirm that? We confirm that when we see them start building an even larger long position. So that means whenever we see retail open even more shorts, that's exactly when it's confirmed to us. So right over here, this was probably a medium probability information. That's where I took my entry, where we retested this low and we were consolidating at this resistance. that was a medium probability confirmation for me, because if it would break beyond this high, it would interact with these, and then that means retail starts entering shorts, which means the market makers increase their longs. So at this point, it was a medium probability confirmation. I entered my long, and why did I target over here? Well, you got to ask yourself, if retail is long, or if retail is short over here, until when are they short? Well, the guys who are short in here are likely getting stopped out over here on the daily chart. But on the weekly chart, the guys who are trading the structure have their stops over here. So there's a lot of liquidity over here, which we see the first expansion to, the first distribution. And then there's a lot of liquidity over here, which we see the second distribution to. So the market makers distributed their longs here and here. That's where they distributed their longs. So this tells you, so when I was down here, when price was down here, I was thinking like this. Okay, so until when is retail short? And I said that's likely going to be until here. And that's why I took a long position, stop here, and I aim for here. And by the way, I have 25% still running because I caught an all-time low in an altcoin. It's altcoin season. It could continue higher. I do see it going higher, to be honest. I do think retail is entering more shorts around here with a stop loss up here. So I think the next distribution is going to be up to here. And we'll see what happens beyond that, right? We'll see. So you see how this logic can be applied on these charts. How I can think with this mindset, this predator mindset. Okay, retail is doing this. Okay, that's what I do the opposite of. These sharks are doing this. These are the guys I mimic. That's how you ought to think in these markets if you want to win. I mean, that's one of the ways, at least. I mean, sure, you can. I mean, I respect anyone who has a strategy that's profitable. Not all strategies need to have logic behind them. Maybe just see a pattern that plays out and it gives you odds that are not natural, right? So if natural odds would be with 1-for-1 versus reward, it would be 50-50. If you can beat those and you can make it 65-35, 65% win, 35% lose, then sure, that's a profitable strategy. Good, well done. But the thing is, for me at least, I need the strategy to make sense to me if I wanna believe it, if I wanna go through losing streaks and still continue, and if I wanna be able to risk heavy. So that's why I personally like this strategy a lot. So think with this mindset. Always look what is retail doing, and don't live in a bubble. Like literally try to really understand what they're doing. Don't be like, okay, price is here, so the liquidity is down here. No, that's incorrect. The liquidity is not down here when price is up here. That's incorrect. The liquidity is only down here once we start touching down over here. That is when it's there. Because otherwise, price can just continue pushing up higher if it wants, right? So don't be a retard and try thinking all of these dumb things, and then when it doesn't work, and then you blame the markets and not yourself. Just, you know, you gotta connect reality, right? So, but yeah, I hope you enjoyed the video. Leave a like, subscribe, join my Telegram, and sure, if you want to learn more about liquidity, then I have a community called the Lions Den. It's a premium community. Everyone in there, there's over 100, probably like 150 people in there. All learning liquidity from me. There's probably like so far 9 days of teaching. So each day is pretty much a class, a 1-hour class kind of, in which I teach liquidity comprehensively. And there's an entire community you can interact with. And I post my trades there. Every trade I take, I post it over there. And I share my bias and all that. I finished June plus 43R. So my average risk is 1% of my starting balance of the month. So that means I made 43% on my account that month. And all trades were shared live. And it's all based on sound logic. The students are hitting wins, hitting W's. If you want more information on that, it's going to be in the description. The current price to join is $200. It was $120 when it just started, and I just kept bumping price up and up and up and up and up, and it's going to continue bumping up. I mean, as the quality increases, I'm going to continue bumping it up. So yeah. Yeah. If you want to learn liquidity, that is the best place to be. And peace.